Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Wednesday, January 25th, 2017. Well, folks, in this video today, I want to go over the earnings announcements, the big ones after the after hours. Before they happen, I want to give you my bias based on chart analysis. Let's start out with Western Digital here, WDC. The chart gapped up on sympathy to STX. Therefore, logic dictates not only is it overbought on the chart, but it is factoring in great earnings with the gap up today. Putting in a doji pattern, I have a negative bias on this stock going into earnings. Qualcomm, let's take a look at Qualcomm reporting after the bell. Up a little bit today. I am neutral to positive on this. So again, neutral to positive means it could be up a little bit on earnings. That is my bias. The reason I say that is because after getting sued for $1 billion from Apple, the stock plummeted. However, you know the company will defend and say it's not that big of a deal today in the press conference. Overall, for the most part, their earnings should be very good as well. I expect a small bounce back, maybe another $1.50 up after hours. All right, next stop, stock. Let's take a look at LVS, Las Vegas Sands, reporting after the bell here today. The first thing that jumps out to me is that the stock is not at its highs, so it hasn't factored in great earnings yet. In addition, I think the earnings will be solid, maybe not amazing, but enough to push it higher. The reason I like the earnings here as well, look at this bullish consolidation pattern leading into earnings. So again, you had to move up, and then look at this beautiful bull flag pattern. It's again an in spirit of, we call it in spirit of, more loosely based pattern formation there. Nonetheless, it is bullish going into earnings. Therefore, I give it a positive bias. Upside generally, I would say about $58 to $60 target upside on earnings. Next one, LRCX. Take a look at LRCX. That stock is trading higher today going into earnings after the bell. This stock I am very bearish on. I expect at least a $3 to $5 decline on earnings. The chart, look at this run it's had. Since the beginning of 2016, the stock's up from 60 bucks. Basically, if you look at this low, 62 and change, we're basically almost 100% higher just in the last year from the lows here. That is incredible. The fact that it's up today is already factoring in better than expected earnings. That means it will have to do even better to continue up. The stock, again, in my opinion, very short-term, overbought, and therefore a negative bias. Again, looking for $3 to $5 decline on that stock. Last one, XLNX, Xilinx. Xilinx is a trickier one because the stock doesn't have any defined patterns. It's not at its highs. It's not overbought. It's just up a little short term. I am going to give this a neutral bias. I would love to give you a specific bias on this, but there's no sense in doing so if I'm going to be wrong. Therefore, let's wait on the sidelines here and just see what it does. But again, folks, this is where it's all at. You read the earnings by reading the charts. You know what the earnings are going to be with a high percentage of success before they even come out. This is what we love to do here, folks. It is freaking awesome. So come join us at InTheMoneyStocks.com. Get involved and profit. Talk to you soon, guys. Take care.